You are listening to the Wealth Formula Podcast with Buck Joffrey. Get ready to change your life.
Welcome, everybody. This is Buck Joffrey with the Wealth Formula Podcast coming to you from Montecito, California. And before I begin, I want to remind you that there is a website associated with this podcast. It's called wealthformula.com. Lots of goodies there, including some downloads, some books, and webinars. But it's also where you want to go if you want to sign up for additional things to bring you further into this community, such as the Investor Club if you are an accredited investor and you're interested in potentially getting onboarded into our private group. Go to wealthformula.com and start that process by signing up for the Investor Club there. And then also there is this group, which again, I actually think this would make a great Christmas gift if you're interested. But there's a course that's called Your Roadmap to Real Wealth. Okay, and all you need to do is go to wealthformularoadmap.com to see that. But you got the course, and it's got a lot of the people you know, Tom Wheelwright, Kenny McElroy, the usual suspects, great personal finance basics from the way we do things. But the additional value in that is that you also get to participate in Wealth Formula Network, Zoom video conferences every other week, and a Facebook group that's active all the time. Anyway, go check that out as well. Now, as for today, let's talk a little bit about cryptocurrency, blockchain, that kind of thing again. This market, the cryptocurrency market, has been absolutely crushed, obviously. And don't be surprised if it goes down even more pretty soon because, the FTX meltdown really did do a number on the markets. But the repercussions of the FTX meltdown with this Sam Bankman-Fried dude are hard to understand right now. A lot of these companies that were solid companies were having a lot of problems. For example, BlockFi, which we had the founder of BlockFi, which was a really good company. I think they had too much exposure to FTX, and they ended up declaring bankruptcy. However, don't be fooled. Don't be fooled to think that this is any way the end of cryptocurrency. For sure, Bitcoin, by the way. I just don't. Bitcoin right now is nothing but a massive buying opportunity in my view. But let's talk about other stuff, right? It's not dying. I've been around long enough to have seen cryptocurrency markets and cryptocurrency declared dead several times over, and it won't happen. It just won't happen because, the critics of cryptocurrency say, well, gosh, this is like tulips, right? This mania. Tulips never did anything. I mean, maybe they smell good. I don't know. Maybe they smell good. Do they? Maybe I should get some tulips. Anyway, tulips don't do much, whereas crypto assets typically underlie some kind of decentralized distributed ledger technology that could potentially change our world. Now, most of them won't. Most of them will go down bursting into flames. But some of them will become the Amazons and Googles of tomorrow, and they will become things that we either know of or will just be layered into the fabric of our everyday existence. And, okay, so I'm saying that. You've heard me say that before, and you're probably getting kind of sick of it because other people talk, it's, cryptocurrency and blockchain technology is going to change the world, right? So probably a good idea to drill down on that a little bit more and highlight some of the examples of what this technology actually can do. Decentralized finance, DeFi as the cool kids call it, is a major revolution. It's happening right now, and it's still in its infancy, but it's pretty clear that the technology in some form represents the future of banking and really probably all financial market transactions. But why is it advantageous? This is an important question, and I think it's, one that's not that obvious, right? People will be like, well, it's decentralized, right? What does that mean? And And this is something you got to be really careful about because you see, tokenization of real estate and things like that. And in reality, I don't really see the benefit of that so much, especially, I think there's even some potential problems and downsides because how do you take depreciation if you own your tokens, own your real estate shares through tokens. Anyway, bottom line is tokenization also does not replace good operations and good assets. So just, it's become a real marketing gimmick. So just beware of that. I'm not saying everybody's just a gimmick, but there are lots of gimmicks out there that want to get people excited. Oh, well, this is tokenized. So what? Anyway, on the other hand, there are certainly a lot of clear advantages or potential advantages to tokenizing assets. I mean, in the sense that they can be traded and potentially provide individuals access to things in which they might not otherwise be able to invest. The true democratization of DeFi, I don't know. I think we're a ways off from that. I think it's going to be a tricky thing to start seeing people, really utilizing this stuff in like real estate deals and transactions and things like that, where it actually has some meaning behind it and liquidity, right? But in other words, there's a lot of kinks to be worked out. And while I still believe in the technology, the current state of DeFi is still fraught with charlatans and Ponzi schemes. And frankly, a major reason this is possible is that few DeFi projects are purely, ironically, decentralized. They say they are, but when someone is, essentially at one end of the funnel or the other in charge, that's not true decentralization. And on the other hand, true decentralization is right now is like a big chaotic mess. So it's complicated. But I think we will figure it out. We'll figure out how to use this thing in an efficient means. Anyway, I don't know enough about this topic, to truly teach you. And that's often when I try to find people to interview. So that's what I did this week. I'm interviewing a guy by the name of Alex Vergara. He is, he's using DeFi for good, for fundraising, for humanity and things like that. But he also knows a lot and is good at explaining this stuff. So when we're back, Alex Vergara is going to tell us all about DeFi. Welcome back to the show, everyone. Today, my guest on Wealth Formula Podcast is Alex Vergara, who leads Earth Fund's community team. And Earth Fund is responsible for growing an engaged global community of people that want to help fund big ideas with the potential to change the world. Alex brings his experience as an entrepreneur together with his firsthand experience growing a philanthropic token to launch Earth Fund. So welcome to the show, Alex.
Thank you. How are you, Buck? Thanks for having me.
I'm doing good. Thanks for joining me. Why don't you start out by telling us a little bit about yourself, how you got interested in, the things that you're involved in, namely, I guess, the big things being, cryptocurrency and philanthropy and DAOs. How did you arrive this space?
So there, that's multifaceted. But I really, about 5 years ago, I had this yearning to really, give back to community, in order to, to raise money, to work voluntarily. So I just had something inside of me that I had to do it. And then I go to church now and I read the Bible. So it's like, okay, this is telling me that I have to do it. I started reading Rich Dad, Poor Dad by Robert Kiyosaki, started reading, Think and Grow Rich. And I'm like, okay, wait, all these books that are talking about how you have to give, then you have to give in order to receive, and giving is so important, and they all have a chapter assigned for it. So it really sparked this interest to give to my community and give to however many people as I could. And there's a quote that really stood out to me. I think it was by Kiyosaki that he said, the purpose is to serve. So don't think about making money, think about serving as many people as possible. And that just really stood out to me. So fast forward a couple years, I was talking to actually one of my clients at the time, in his garage. I was a personal trainer. I was in the fitness industry. I had a couple gyms, and we were learning about DeFi, so decentralized finance. And, we started learning about, I don't know if anybody's familiar, but we started going into this rabbit hole of how to use it. And you have all these weird names like Pancake Swap and Sushi Swap and Uniswap and all these complicated methods to get these tokens and these smart contracts under each one of these, like let's say Ethereum. So I started teaching him how to do it, and we started working together on it. And all of a sudden he knew somebody that was launching a project. So I said, okay, like I'm going to invest a little bit. So I put $30 and he put I think it was like $1,000, $2,000. And within a very short time, we were seed investors. I saw my $30 go to $170,000. And he saw his $2,000 go to, I think it was 6 million.
Wow.
Now it was unrealized. But it was just this exponential explosion. The company went from being worth $3,000 at the time to being a 70 million market cap.
Where's
so
it
all
now?
of a sudden we looked at each other like, what just happened here?
But that was part of the crypto boom, or what?
This was about 2 years ago. So it was as the bull market was kind of picking up. So there was a lot of promotion of the company. There was a lot of big events. And from there, Adam Bolt, he's the client that I was talking about. He's like, wait a second, I've successfully exited 3 fintech companies. Like I've formulated all these companies. I've got a large round investors. Like we can make something out of this. We can make something really good, and we can make something that, if we're focused, we can make the world a better place using this technology.
Well, I hope your $30 hasn't returned back to $30 since the market crash.
No, I mean, I slowly sold over time. Smart. So I know I did realize a significant gain. But you also don't want to rug pull the liquidity, so there's kind of that side where you care about the project and you want to take care of it long term. But from there we grew Earth Fund, and we created a platform for the good for the world.
So Earth Fund has its own token. Is that right?
Yes, sir. So you create a smart contract token off of Ethereum. So it's a little bit complicated, but basically think of Ethereum as the New York Stock Exchange, and then our token One Earth is like a stock within the stock exchange.
Okay, and that is traded where? Like, how do you trade that?
It's on a platform called KuCoin, and we're also on Gate.io. We actually launched exclusively on KuCoin initially, so it's a top 5 exchange.
Sure. Got it. All right. Well, let's back up a little bit. I think just for the sake of, what this audience may know, may not know, I think one of the things that I think we should drill down a little bit on and try to understand better is decentralized finance and, DAOs and what exactly these things are. So tell us, I think you just mentioned Ethereum as a bank, but let's talk a little bit about decentralization and specifically as DAOs. What exactly does this all mean in finance?
So I mean, for decentralization, we can go like really deep into the rabbit hole, but basically not having a centralized entity control. In this case, let's say your shares. So in order to purchase shares, you have to go through, please excuse me, I don't know the exact terms or anything, but you have to go through a centralized entity, right? So if I want to buy some Apple shares, I need to go and purchase them, whether it be through Robinhood or through some holder. In decentralized, in DeFi, it's all done automatically. So it's all done through an algorithm, and it's all done through software. Mm-hmm. So the custodian, the person holding these tokens, or let's call them stocks for this instance.
It's like a direct trade as opposed to having a middleman, right?
Precisely. It's immediate because you have the liquidity pool and you have a contract that's holding on to this. So at no point can anybody just say like, we're turning off the button, we're turning off the switch, trading is not allowed. Like we saw in Robinhood, and we've seen with a couple other platforms as well.
Does decentralized finance specifically is it really referring to the process of market trading, or is it broader than that?
Very simply put, I would say yes. Decentralization in a whole gets very, very broad. It's basically, a
No,
group
I
of
mean DeFi. DeFi.
oh, DeFi.
Yeah.
Yeah. It's the trading in and out without having to deal with a centralized entity. Exactly.
So what's the, in your view, some people may argue, given, some of the characters that have come out lately in the world of cryptocurrency, with this, like Friedman, or, with Terra Luna stuff that happened and all that, hey, maybe it's not so bad to have a centralized bank that is under scrutiny of securities regulation and make sure that people don't get screwed, right? And so that might be the way some people think. What do you say? What's the rebuttal to that from the standpoint of decentralized finance?
I would say a couple things. The first would be most of life solutions are in neither extreme. They're usually somewhere in the middle. And secondly to that, I would say that regulations haven't stopped people from being scammed. So if you rewind to the era of Enron, there was heavily regulated. Plenty of people did their due diligence. A lot of people lost a lot of money. I think it was $20 billion. So, there's this, I would argue that there's this misconception that regulation equals safety. I will say myself, I was a radical for decentralization, and now I look at decentralization as an option. Whereas I want it to be available. I want people to be able to access these things. Will there be bad characters? Absolutely. Will there be amazing projects, and will there be the opportunity to capitalize on them? Absolutely.
What is the main advantage for decentralization as opposed to having some central authority, in your view?
Just democratization, the ability for individuals to have power. So here we have a project where we can fundraise across the entire world. Anybody can launch a project, whether it be in Nigeria or the USA or Mexico, and they can get funds from people all around the world to fund their ideas. I think that's very powerful. I think that it goes cross borders. And if we look at money, computers are advanced. We have a very digital age. We're talking through Zoom right now, but money is still very analog. We have Swift payments. It's very slow. It's very expensive. It's very inefficient. And DeFi gives us the opportunity to work across borders. So I think that that's a very powerful tool. I think that there do have to be some safety measures put into it, and there has to be a better understanding of the technology in order to move it forward. But I definitely want to see it as an option for the future.
Yeah. I think your idea of, not being a radical on this issue is probably wise, because I think from my perspective, the technology is really important. It's an advancement. It's more efficient, and we're moving towards a more efficient technology. But I think the challenge is the very thing that makes it, gives it the democratization and all, is also the things that makes it extremely difficult to control. And to your point about Enron, that may be the case, but I don't think, you or me, listen, I've been in crypto since 2017. I would never argue that there's a parallel in terms of the amount of scamming going on in crypto versus regular markets right now.
Oh, I agree. Absolutely.
So I don't know that that's a fair parallel, but I think
I agree with you.
If you look at it more as a technology, then the question is, well, is it so powerful that, the mainstream banks and trading platforms are going to have to move towards it, right?
Oh, absolutely. They already are. I've connected with and had meetings with people in Visa, and they've been looking into blockchain technology for years now, because they understand that the payment system is it's a dinosaur, and when you look at stable coins for countries, it's already happening. There's countries that are expecting them as early as 2025. If you look at China, for the people listening, a stable coin is just a digital currency for that country. So China during the previous Olympics used, I think it was over $250,000 in just digital currency, and they were experimenting with the Olympians paying with digital currency. So this is something that whether people realize it or not, it's already happening. The back end is being built out. And from my perspective, like I said, if the countries are working so pragmatically towards it, why wouldn't we have an option as individuals? So I really look at it as an arms race of centralization versus decentralization. And again, not to be radical to say the future is decentralized, but I definitely want an option.
Yeah. Terminology wise, DAO. What's a DAO?
Decentralized Autonomous Organization.
Okay, so that's what you have. Tell everybody what exactly that means.
Really, all it is it's software that allows people across the planet to vote on. Let's say, for the example, our company is restructuring, and we're creating a parent company to use it as a vessel for investments. So in order to do that, our company the DAO votes and accepts it. So it's in public ledger. Everybody can see it. It can be done in little as 3 days. We have this vote, this one in particular, for 2 weeks, if I'm not mistaken. And all the token holders decide whether this is going to be something that passes or not. So it just really allows the international community to have a voice within the company, within the nonprofit, within a small group. So it's just a really easy way to vote and organize the votes and have a ledger and record system.
Let's talk specifically about what you're doing as so we can kind of understand how a DAO works, right? So your DAO is you have a DAO, right?
Yeah, so it's part of the company is Earth Fund DAO. So for example, we have the parent company that's about to be formed, and the Earth Fund DAO will own approximately 20% of that. So anytime it's in profit, anytime there's movement, the DAO owns 20%. The DAO can then decide how to distribute that money. So whether it be funding other projects across the world, whether it be token buyback, whatever the case may be, you can propose it, and people will vote on what the let's say the destiny of the money is.
Mechanically speaking, so like how does that work without having some kind of central processor? Like even to put like where does the money go? Who's the one who's giving people choices?
Yeah, so it's a great question actually, and that leads to understanding DAOs. And there's a DAO first system, and then there's exit to DAO. And DAO first, I think, is a little bit too chaotic, and it kind of goes into the lines of anarchy a bit. But basically, you do need like a centralized governing body. So like, let's say a board of governors. You don't need it, but you need some type of constitution, some type of document for governance. So it's not like it's completely decentralized. Some people would like to believe that, but that just has shown that it's not efficient and there's no forward progress, right? Are we going to be voting on what the flavor of coffee is? Like, do we have to vote on everything? So then within that document, you start setting up what you believe the responsibility of the DAO is. And then, like I said, you could start electing governors. There's many different forms of governance, just like in countries around the world. But it just allows people to get together and vote on whatever that DAO in particular decides.
I'm curious because I think this is actually common, and this is it's a good thing, but on the other hand, this is the point where I think people start to get suspicious, right? Where, yeah, it's decentralized, but except there's a centralized component, right? And the centralized component is, the whole concept behind decentralization in part is to level the playing field, and democratize things. But if ultimately there is some sort of centralized figure there, I mean, I guess I don't really understand necessarily the advantage. I mean, other than access for people.
Like I said, it depends on your on your constitution and your voting system, right? So there's the voting system where it's 1-for-1. So if I represent one vote, or you can work on, how much money you have put into something or how many tokens you own. And you can do it that way. So to kind of use an example of real estate, let's say, and let's forget about all the securities and legal stuff for a second. Let's push that aside. But if a group of 10 friends get together and they want to invest in a real estate project, let's call it a commercial project, and each one of those friends puts in an equal amount of money. So, each one puts in $250,000. And they decide that, they're deciding if we want to take this project down and we want to build over it. If you build over it, you have to put in another equal share of money. You can decide that in a DAO. So you don't have to get together. You don't have to have a meeting. You can just have the proposal and people can vote on it. With that being said as well, if a partner wants to get out of it, they can sell their even token. So let's say, everybody decided to put in $250,000. Like I said, someone can purchase them out for the $250,000 and they would own that token and continue the voting process. So it's really just an easy way to have a voting system. But again, DAOs can be as small as 3 people, or it could be as large as 1 million. Or even greater than that. This just really allows for scalability, and the software actually you can hold money custodially through this software as well too, and you can create contracts. So like vesting schedules, which we've done. You can create liquidity, whatever you would like. You can create it within this ecosystem. So it just adds a trustless system for people to get together and raise funds, or just decide on something even without money.
So I know there was a bunch of DAOs. I mean, I didn't get involved in anything like this, but especially when NFTs were going crazy, there were like DAOs buying NFTs and things like that. In those setups, like, were they truly, in your view, trying to get everybody an equal shot at making money, or was there often a central figure that was sucking off a lot of the profits?
I would say there have been cases of idealists that are hardcore decentralization fans that want to make an even playing field for more people. And then there are opportunists that come in and say, hey, listen, we're gonna own this and we're gonna take this. I've seen both. But then you do have ideas like people that want to buy, let's say like the New York Giants, through a DAO. You have people that wanted to buy a copy of the Constitution DAO. So it's just, you can put it out into the universe. There's also Lynx DAO. They want to create the world's most perfect golf club. And they, not club itself, but like a golf range, let's say, so that people could come together and play on it. So, it's a great way to kind of form a community and to let the public know, hey, we're forming this community. If anybody wants to work in on us, this is how you purchase in on it. And this is what we're going to build. And you'll be able to have decision-making abilities for it. But absolutely, like everything, like you said, there are scammers, there are people that are taking advantage of the system. Absolutely.
In terms of how difficult it is, you talk about democratization, but to a certain degree, there's also an element of, being tech savvy enough. How difficult is it to set up a DAO, right? Like, can somebody, could I say, hey, I just want to set up a DAO. And, I'm not super tech savvy. I can use your exchanges and things like that, but, I'm not a programmer. How difficult is it for somebody to set up a DAO? Are they going to need somebody who's sort of super techie?
I'm really glad you asked that. And before our platform launched, it was pretty difficult. It was very tech heavy. There's a lot of research that had to be done to understand how to do it, multiple steps. And our platform really wanted to work in the system of Apple, meaning we want to create the user experience, what we want the user to experience, and then we build the back end. We push that into the technology. So using our platform, people can literally go on the website. They have to know how to set up a digital wallet, which is a couple minutes at the most. And then after that, once they launch a DAO, it's a couple clicks. It's all very, very Web2 easy, very, very easy. When I first went into the world of Web3, there was a long a long list of things to learn before you could interact. That's unacceptable. If we want this to be ready for mass adoption, it has to be easy.
Okay,
people don't know.
So real quick in terms of that. So let's say I wanted to do I wanted to set up a DAO for, buying art. Okay, buying a specific piece of art or some watches or something like that. I like to kind of walk through it to figure out like the issues that come up. So I want to do that. I go to Earth, your site. Is it Earthfund?
Earthfund.io.
Earthfund.io. Okay. Now you're going to get a bunch of people that are setting up DAOs.
Check us out, please.
Yeah. So I go to earthfund.io and basically there's something there that says set up a DAO, right?
Yep. So currently, I will warn before people go on, our DAOs are currently in place for making the world a better place. So for philanthropic reasons, for people that want to build a better world.
Got it. So it's not for profit, then generally it's nonprofit.
Generally it's just for philanthropist organizations, people like the Deepak Chopra Foundation that want to make the world a better place. They're one of our partners.
Okay, but just for exercise, because I presume there are other, platforms outside of Earthfund that help you set up DAOs pretty easily.
It's getting there. But just to walk you through what setting up a DAO entails, it's you have to have a digital wallet. So that's one. Usually the main go-to is MetaMask. Once you have a digital wallet, you need a voting system. There's a gasless voting system called Snapshot. And you have to, in order to set that up, you have to have what's called an ENS domain name, which is basically naming your digital wallet or having like a website for you in Web3. After you do that, then you need a treasury management system, which we use CoinShift. We've partnered with CoinShift and Snapshot. Then after that, you need to set up, you don't have to, but it's advised to have a multi-sig wallet, which means that, that wallet has to be signed by multiple other wallets in order for money to go in and out of it. And that's for safety reasons. So it's quite labor intensive, and our platform does all of those things with just 2 clicks. It does it all automatically.
So if somebody, now going back to your platform in particular, if somebody wanted to set up some kind of a charitable thing, so they go there, they click on it, and what does that do? Like, in effect, all of a sudden you've created a new token or what?
Yep. So our website creates the platform creates a new token for you. You can name it. Let's say, you want to say, "We love the Earth" token. You set up that token. You can actually say how many tokens you want. So let's say you want it to be represented by 500 tokens. You can say when it will be distributed to the community, if you're going to distribute any of them or if they need to purchase them. You can select the DAO name, so the ENS domain name of, let's say, we love the Earth. So it'll be we love the Earth. It'll also give you a subdomain name on Earthfund platform, meaning earthfund.io/we love the Earth. And it'll give you a charity page. So all of those things just happen autonomously. You get the multi-signature wallet, like I said, and you get gasless voting. So for those that don't know, when you vote on the blockchain, it actually costs money. So Snapshot, it doesn't cost you any money. It just gets saved.
Okay. So say I have 1,000 tokens and now I want to go out and raise money. And I tell my friends, I send out an email, "Hey, I'm raising money for this cause." Where do they buy? Would they have to go back to this same platform and then they would buy, and then that market cap basically would determine the price, or how?
No. So we've created those tokens to be more like stable coins, in the sense where you can buy your votes in and out and sell them for the same price, because we don't want volatility to be a factor for it. But there's 2 separate entities in that sense, not legal entities, but there's 2 separate functions. Let's say there's a side of people who want to vote and interact with the community in that sense, and they can buy their tokens to do that. And then there's a side of people who just want to contribute funds financially, who want to, just say, I want to donate to this cause, and that goes into the main treasury. Now, what's interesting about it is we're rewarding users for voting. So you set up this We Love the Earth DAO. You could set up that for every time that a project gets funding, all the token holders or users get rewarded, let's say 7%. So in the case of the Deepak Chopra Never Alone DAO, which we set up, there was a $100,000 project that got funded. All the token holders got 7% of that. It got distributed evenly. So everybody got, $7,000 distributed by how many token holders there were.
So effectively, they were able to make a profit and do something to help. So they raised and then they got some money back.
Precisely. So that kind of encourages, people to spread it on social media. It encourages people to vote. It encourages people to vet the projects, do research on them, comment on why they voted on them. So we're rewarding people for in fact making the world a better place. Precisely.
Tell Alex, tell us anything else about Earth Fund that we should know, because I don't know enough about this stuff to make sure that I've asked you all the right questions.
Yeah, sure. So something that we're working on that's actually pretty interesting, a solution that we're looking to solve is a KYC system. So know your customer. So when people give large donations, they can be tax-free. So people, in fact, will be able to donate crypto and they'll be able to receive a receipt from the nonprofit. So this is something that is a problem that hasn't been solved for yet. And we believe that it's a major step for mass adoption.
Cool. Alex, it's been really fun talking to you and putting up with my basic questions about DAOs and decentralization. It's been fun and good luck to you on your project.
Thank you. Thank you for having me. And I hope you have an amazing day. This has been a great time. Thank you.
We'll be right back. Welcome back to the show, everyone. Hope you enjoyed it. Before I go, I want to remind you, if you're trying to think of a Christmas present, maybe you should consider your roadmap to real wealth, which is the course that I mentioned earlier at the beginning. It is a course on personal finance, and it also includes membership in a Wealth Formula Network, which allows you to talk to other people, via Zoom every other week, including me, and have a Facebook group and get a lot of your personal finance needs, knowledge needs met. That's it for me this week on Wealth Formula Podcast. This is Buck Joffrey signing off.
Thank you for listening to the Wealth Formula Podcast. Visit us on the web at wealthformula.com. The information contained in this podcast are opinions, not fact. As always, consult your own financial team before making any investment. See you next time.